Hi friends, Simit here from Informed Trades. Today I want to share the latest trade I placed in the Forex market, sort of a long-term trade. I've been very interested in the the US dollar Japanese yen exchange rate, and that's been a position that I've accumulated or I've bought before. So I bought it earlier in the year, right around here, at around 118.40. Now price is basically at that level again, and so I'm basically, my existing position is basically flat, but I do think that it's an interesting time to buy because, as you can see, if you look at this blue trend line here, this line, and let me actually make that a little, oh, well, it is as large as it can be. Let's make it solid. That line, that blue solid line, now we're at that trend line, and that goes back to October of 2012, which is really the start of when we started seeing the dollar-yen exchange rate rise. So we are now at a point where we're basically touching that trend line, and so I thought it'd be a good time to add. Now, in terms of a stop-loss placement, I definitely have a long-term horizon on this, and so I'm putting my stop at 114.09. I wanted it to be well below the low of this long wick candle right here. Let's zoom in a little bit. So the low of this, we see a spike right around here, and the fact that it spiked to the trend line and the market bounced right back up from it is something I'm regarding as a positive sign that this trend line is being respected by buyers. And we really haven't, the trend line has held up pretty well. We see a little bit of a break back here, but the market quickly rallied and made another strong move up. So I think that could happen in this instance here. I have my stop at 114.09, which is well below this low here. So if price reaches that, and this hypothesis that this trend line would hold is disproven, and I would want to close out my position. One thing I should note, which gives me some pause for concern, is if we go out to the monthly chart, let's zoom out a little bit, we see that, right around here, let's put that on there again, that red line, let's actually change the color, let's make it golden color. That level is a pretty major resistance level if we go back to 2007, so right before, or basically right at, the great, crash, global, depression of sorts that started in Q4 of 2007. We're at that level again on the dollar-yen exchange rate. So when we hit that level, we really tumbled back down. If that happens again, I'll be looking to buy. I'll close out my position at 114.09, and I'll be looking to buy, 102. I can see the market finding some support here. And of course, even, want to have some capital ready for a big fall down to the low 70s, or excuse me, high 70s, if that happens. However, I do think, there's a chance that this trend line is going to hold, so I'm buying here with my stop at 114.09. In terms of a target, this is a longer-term position. I do want to build a position in dollar-yen. I do think the yen has basically some of the worst, macroeconomic fundamentals of any currency in the world today. We talked a lot about that on Informed Trades. The evidence, the debt problem they have, the demographic problem, the deficit problem. Those three Ds, debt, deficit, and demographics, is why I think the yen is going to decline more than any other currency, really. So I just wanted to share that trade. That's about it. Any questions you have, anything you want to add, join us at informedtrades.com. We also have a lot of educational material there, so if the concepts I'm presenting here are unfamiliar, you want a refresher, check out Informed Trades, and best of luck in trading and investing. We'll see you next time. Take care.